Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Welcome back to the show, Rick.
Always a pleasure, Jim. Thanks for inviting me.
Rick, is the stock market immune to bad news right now?
It loves bad news, you know. It gets into these, it's really a cyclical thing. And when the market is going up, whatever the news, it's spun bullishly. Like the news basically responds to the market, not the other way around. So today we've got a story on the front page of the Journal, a little brief here. It says that Foxconn said it's ready to shift production for Apple out of China if necessary, trying to assuage investor concerns over trade tensions. Now, this isn't a little thing. Apple buys so much of its stuff assembled in China, and to talk about lining up different suppliers, that's a major, major, major problem for Apple. And yet, the story comes at a time when, if you look at the chart of Apple, it's been in a vertical parabola the last couple of weeks. So, when they talk about investor concerns, there are no concerns right now. We're sort of in buying mode.
If that's the case, I mean, I also wonder about Boeing with all the bad news about their 737 MAX. Why haven't Boeing shares fallen more than they have?
Yeah, that is so sick, it's beyond belief. You know, I think it's a national embarrassment, a global embarrassment that Boeing trades higher no matter what the news. You get these scandals that the company knew, and they didn't really give the pilots proper instruction, and this and that. And you've got 362 certified absolute winners in a tort claim because Boeing is obviously negligible in the deaths of all those people involved in 2 737 MAX crashes. So with headlines like that, the stock at worst holds its own. It's like up on a day, or and the reason is it's definitely in that too big to fail category. It's a huge defense contractor for the U.S. It's a huge earner of foreign exchange, it's just it's not only too big to fail, it's too big even to fall as a stock. So it's the institutions have all sort of hung together, and they said, okay, we hit the stock on the initial news, but we're not marking it down any more than it already is, and that solves their problem of if all the institutions want to bail out, who the heck do they sell to?
We'll have more with Rick Ackerman right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Rick Ackerman. Rick, are we in what I would call a step-down correction where you have a couple of days where it's down quite a bit, then it seems to recover most of it, but if you take a look at a long-term chart, it's stepping down. Can we expect this to last for a long time?
Yeah, maybe how many years? I mean, the buy the dips mentality right now is so entrenched that even hardcore perma-bears like me are wondering how could it possibly end. The dips can be short, very precipitous, but they just don't last long. And before you know it, everybody's climbing back into stocks, and I do mean climbing. It's just amazing. Buy the dips is really ingrained. But a friend of mine sent me a little heads up the other day. There's some guy apparently pretty well known in the Elliott wave forecasting area, and he said exactly what I don't want to hear. He said, well, we could see another few years of this. And when I look at the real world, China and Europe sinking into recession and global trade wars and this and that, I'm thinking this market, the bull market, is not long for this world. So here's this guy out there saying, yeah, this bull market's going to end, but he's talking about 2022, 2023. So when I look at my own charts in that frame of reference, I don't see anything that allows me to say, hey, there's no way this Dow is not going to get to 35,000, or hey, the market's going to collapse. When you look at a very long-term chart, there's nothing like that there. So I have to believe that as bearish as a case as you can make right now, the Dow's capable of doing anything.
Well, if they drop interest rates, would that see another wave of stock buybacks because of cheap money?
Well, I've been writing about that. The question of how much pop are we going to get if they bring interest rates down? They're already down. I mean, for all the talk about the Fed and its masterful control of the money supply and interest rates, the markets have already made an adjustment, and I hesitate to credit Fed and all its blather for causing that to happen. I think essentially the market's got it right. It's adjusted rates downward simply because it expects the pace of business globally to slow down. So you tell me, with rates down, are we getting that pop in housing? I don't think so, because home prices are so inflated that they've essentially priced first-time buyers out of the market, and so now the upper end, it's absolutely insane there, where you've got how many 25, 50, $75 million homes can you count? They're everywhere out there. So you see signs of a bubble in that respect, but I really wonder how much bang we're going to get from lowering interest rates just a little bit more, which is all the room we've got.
Well, in West Vancouver, home of the priciest real estate in Canada, where all the millionaires live, we've seen houses go from 14 million to 7 million, but and lower interest rates. The thing is, the banks won't lend you the money unless you have a 50 or 60% down payment, because they don't trust the prices to even hold it at these low rates.
Well, that doesn't seem to have, I don't know, I say it doesn't seem to have cooled the market, but you may have hit a top. I think someone was building a $500 million spec house in L.A., and that may even ring bells among some of the high-end realtors. But so maybe we really have crested there. But I know people very knowledgeable in the real estate market. One guy, a friend of mine in Scottsdale, and he's been flipping homes in the $2 to $5 million category. But he says that things have just about had it there. That he wants to ratchet his flipping down into the $500,000 to $1 million category. And he's been a very good, very astute real estate investor over the years. And when he says that he's just kind of battening down the hatches, I take that at face value. Not that we're going to see a real estate collapse tomorrow, but when you're up in that in the upper reaches of the real estate, of local real estate, you need to kind of get things in order well before the downturn starts. The downturn.
We'll have more with Rick Ackerman right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, somebody in the Fed said, we may look even at negative interest rates. How would that work? And how does it work for the places that have had negative interest rates up to now?
It amazes me how these bozos, most of them have PhDs in economics, say stuff like that. You know, they talk in such a blasé way about negative interest rates. It's insane. I mean, the very idea of it should cause any economist to turn white just thinking about it. So, but here they are talking like, we may try this, we may try that. What a bunch of morons. You know, even from the example we have in Europe, the question is, well, how are those negative interest rates working for you? The answer is not too well. You know, Europe has been in kind of an incipient recession for the last 30 years. So, you know, talk about negative interest rates is something we might try. There's just so much bluster and hubris in that, it's hard to believe.
Well, Italy wants a little more economic independence, and they're talking about bringing in an unofficial currency that you could use to pay taxes and debts. I mean, what's that all about?
That's great. I don't know if they're talking about wampum or something like real money. Nobody wants to pay their bills in gold, of course, and that's why with all the blather about someday the oil producers are going to make us pay in gold. Good luck. You know, they couldn't sell any of it if we had to pay in a hard currency. But the funny thing about Italy is they've got the most robust, crooked gray market economy of any country in the world, and any country certainly in the West. So Italy's like non-tax-paying, under the table economy really thrives, and they effectively have that wampum already that people are using to bend their transactions around the revenuers.
Well, I recall when I was in Italy, they had the highest gasoline prices in Europe because it's the only place they could be sure somebody would pay taxes on what they bought. I mean, even Sophia Loren, the actress, spent 3 months in jail for tax evasion. It's Italy's official sport. Tax evasion. That's
interesting. I mean, it makes sense, really, that they'll collect taxes where they can. I'm thinking, how do the Russians do it? You know, nobody paid taxes there. And, but yeah, I think Italy's found a good workaround there.
What's happening? Is gold going to be the thing to go to, or we've been saying that for quite some time if the stock markets go down, but if they continue to be this bumpy entity where they gain for a few days, lose for a few days, will people get any more interested in gold than they are right now?
Gold has been such a slog, you know, since topping in 2011, a little above 1,900 an ounce. It's done nothing. I look at it now as being not in a bull market, not in a bear market. It does look a little more like consolidation than distribution, which means it's mildly bullish, but I don't really see it going anywhere. And I think even if that crisis comes for which so many gold bugs have buried doubloons in their backyard, it's not going to push gold to the $50,000 an ounce heights that some of these lunatics talk about. I think gold will always hold its purchasing power relative to any number of other assets, and I think it's good always to keep some gold in reserve. I've got a maple leaf sitting on my desk just to remind me of that fact. But I don't see gold as being a great investment. I would sooner be in long-term treasuries, which I put something out on this last week. Most investors aren't aware of it, but in a good year with yields falling, the short end really has a dramatic effect on the price of long-term bonds. A minor adjustment of short-term rates downward can cause interest on a price on a 30-year to go up quite a bit, and you wind up with capital gains potential in bonds exceeding 20%, which is what you had in many years in that period between 1980 and 2015, where we had a beautiful stretch where there really wasn't any inflation. We're getting into the same thing now. We're reading in the paper the Fed's talking about easing, but there's no inflation in sight here, and the Fed would like to make a little bit more of it. They can't. So I think it's just telling you the conditions are great, really, for jumping into some of these long-term bonds and strips, munis. Actually, less so to munis, but I think on a T-note and 30-year side, you got a great play there now.
Is oil going to recover, and is there a crisis in the shale oil patch?
Well, it seems like the shale oil production is so nimble that these guys can, they can keep operating at a very low threshold running on fumes, as it were. But crude itself, there's only so much mileage there's only so much pressure you can put, upward pressure on prices through cartel actions if the demand isn't there. If you try to control oil prices on the supply side, which is what they've been doing, Russia has really kind of whipped OPEC into shape. It took a little bit of Russian dictatorial control to make OPEC work, but I think, up against an incipient recession in China and Europe, no matter how much constricting they do of supply, it's not going to be enough to force oil prices higher. On the other hand, oil isn't exactly the best thing to be short, because at any point you could get some conflagration in the Middle East that will put 20 or 30% on the price of crude in a jiffy. So I think it's risky, and you always have that upside factor.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim. I appreciate your inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.